Hi, everyone. Welcome back to another episode of Capital Conversations with Effie and Raz.
Hey, everyone.
Today, we're very fortunate. We have a guest, Julian Rizov. Julian, thank you so much for coming and speaking with us.
Thank you so much for having me. It's really, truly appreciated. And I'm so excited to spend some time with you.
We are the lucky ones. Guys, Julian is a DSCR lender. So for those of you who don't know, you're going to learn a lot. Start by telling us what that is, Julian.
The DSCR is actually one of the loans that a lot of people somehow don't fully understand and think that this is kind of more like a hard money loan. Eventually, it's not. This is really a loan that it's a hybrid. I look at this way. It's a hybrid between the conventional lending and investor asset-based lending. So basically, if you ever did a conventional loan, if you look at the conventional loan without the employment income verification and debt to income ratio, this is actually a DSCR loan. Everything else is the same. They will still ask for your verification of mortgage to make sure you're not late on your primary residence. They still will look at your credit, but they will not gonna look at your DTI because the debt to income ratio will be determined by how much your investment property collecting as a rent. So also we'll need the bank statements, to need the reserves, and pretty much full list as a conventional loan. Documentations, however, is no tax returns, no pay stubs, no W-2s. So that's really make it kind of easier. And of course, depends on the credit. Your interest rate can be a little higher, a little lower, and also the leverage will be variable based on your credit score.
So am I understanding correctly for our viewers that a conventional loan, I think most people can understand what that is. Go to your bank and they're going to ask you for everything. They're going to base it on you and whether you can afford to get that first home. If for a DSCR loan, though, you are looking at the individual, but you have the new asset that comes into play. So you're looking at a combination of the two as to what you're looking to lend, or is it the very same factors?
No, actually, it's not. It's literally one of the benefits of using a DSCR is because it's closing on the name of the LLC and not your personal. However, same as
to qualify,
the guarantor who is guaranteed the loan, it's you, the person, and look at your credit, obviously. Mm-hmm. But it's not based on your income personally. So it's kind of hybrid. That's why I said it's hybrid, okay, because it's you, but also the asset. So the combination of the two make it a nice blend and actually the final determination of the terms.
Awesome.
I have a quick question for you on
Yes.
the topic of DSCR loans, because that's what we started talking about. Many people know DSCR loans for long-term rentals. Now, as of a few years ago, when short-term rentals became very popular, there was the concept of doing DSCR for short-term rentals. Now, a lot of people are getting into co-living. Is that also a DSCR loan?
Actually, yes. That's absolutely correct. And fortunately, we have all the funding sources behind us to satisfy and to make it happen, any of those loans. So we have numerous lenders with specific guidelines in order to literally handle any loans that come our way. This is including the short-term rental at a higher leverage, as most of the lenders will be at 75%, but we have lenders that will go to 80% even on a short-term rental. We have a combination of lenders that some might look at the AirDNA, some will look at only on, hey, what is the long-term rent number is. And many times if you go to a lender who is only look at the long-term rental, you might be not getting the right loan because the long-term rental obviously will be way lower than sometimes. Sometimes it's okay, but sometimes getting lower. And if you don't do this up front and you don't use the right funding source, then the client will actually have a bad experience.
Right.
So knowing where and having all these resources is coming really important and handy.
So we can come to a DSCR lender for a long-term rental. You said short-term rental, meaning like Airbnb.
Yes.
What midterm?
Midterm as well.
Midterm. And you said co-living.
Yes.
I'm
So
so
the
excited about that,
midterm rental, it will definitely go if you cannot use the short-term rental data that, let's say, sometimes it's not enough, but you're gonna make money, right? You'll make more than the long-term rental. Then we actually have a very unique guidelines on a couple of our sources. We can go to negative DSCR on paper. We can still do the loan with negative DSCR.
Wow. Okay.
And knowing that you will be making money, you're not worried about being negative every month because you know you're going to make the money. But we still can make the loan happen with negative DSCR.
Let's explain that a little bit. Negative DSCR.
So negative DSCR is happen when your fair market rent on a 1007, which is a form of the appraisal, it's coming to $2,500, but your payment coming to $2,800. So now we have, instead of 1-to-1, which is a normal ratio that we have on a normal DSCR loans, this will be subject to negative DSCR ratio. So two things happening here. First of all, the leverage coming down with 5%. So instead of 80, we need to go to 75 as a max.
Seems fair.
For the negative DSCR. Also the interest rate will have a little hit for the negative DSCR. So it will be slightly higher. With a good score, really will not be that much. So you have two options to accept this rate, which probably most of the time will happen, or pay a little bit to buy it down to the regular one. So if you make money, if you know you're going to make a lot of money with the strategy, then same thing with the co-living. You're not worried about $20, $30, $40, $50 extra a month. But bottom line, we can still make it happen.
That's exciting.
Yeah.
Does it work the same with co-living? Do they drop from 80% to 75?
Yes. Yes, this is across the board for negative DSCR.
Okay, very nice.
So actually we have several resources to go and do the calculation based on the co-living income, which is really coming very handy.
They'll accept the co-living income? Nice. Okay. That's something that a lot of people would be interested in knowing for sure.
Including yourself.
Absolutely. Yes. Absolutely. A couple things come to mind, Julian. One is, are we missing any kind of loans that you do as a
Yes, actually.
Let's talk about some of that.
Yeah,
so
DSCR is only one type of loan that we do, but actually we can cover everything, all kind of loans when you start from conventional lending.
I know that because Julian did my conventional loan, but that's not why he's here.
Yes. So this is only to be really able to provide a full spectrum,
service.
full service to the clients, and they don't need to go and knock on another
Door.
door for another loan. And that was my idea when I created this operation. And so we have all the conventional loans, all the non-QM loans. That means bank statement loans, P&L loans, 1099 loans, ITIN number loans,
Oh, wonderful.
all kind of those non-QM we cover. We have every single loan available today. We offer that as well.
Awesome.
And then we go to the next bucket, which is actually the investor loans, the hard money lending loans, which include fix and flip, bridge, new construction, and then all the DSCR type of loans as well. And then go to the third bucket, which is commercial loans. We do multifamily, industrial, retail, office, hotels. We do SBA business funding for businesses, buying businesses, refi businesses, buy out the business partner.
Wow.
Actually, express SBA line of credits for unsecured line of credits for businesses as well.
My goodness.
Gas stations,
Gas-
laundromats, mobile home parks, RV parks,
Wow.
pretty much everything.
One-stop
Okay.
shop.
Yes.
That brings to question, how did you get into all of such a huge array of loans, of being able to offer that many loans? How long have you been doing this? How did you build up that bevy of that stable of a variety of loans? Because I don't think that is really as
Yes.
common as
No.
no.
So basically started with a conventional lending 2003, which is 22 years ago. And I had my own branch back in the days, in the old times. Then 2008, everything stopped.
Yep.
Basically stopped for 2 years. And then 2010, we started again because the loans start be popular again, even though it was really, really restrictive back then. But between the 2008 and 2010, I start fully being engaged with real estate investing. And I start doing flips. I start doing short-term, short sales,
Okay.
buying short sales at that time.
You were actually doing them, or are you lending on them?
My wife was doing them, and I
Okay.
was not lending. I was buying them as an investor
Interesting.
and flipping them.
Okay, guys.
then.
So if you're looking for a lender that actually also knows real estate the way you want them to know it, Julian has that experience, which is awesome.
So basically in 2010, I start a little bit again with a conventional because I just started getting calls. But in 2000, and I start borrowing money in 2008, 9, and 10 from my hard money lenders. There were not that many back then. It was very, very small ability to borrow at that time. However, that start actually borrowing money as a client, as a borrower, right?
Mm-hmm.
So right after that, a lot of investors start asking me, hey, can you help me with a hard money? We only also need a hard money lending. So I start back then, 2012 or something, to actually doing the first hard money loans to other people. And then fast forward till this day, like 2018, 19, get very serious. Get a little bit more serious, and then 2020 was a kind of full-time, full speed with the hard money lending. And then it helped me a lot because I was actually borrowing money every day and at the same time lending money every day. So knowing the both sides is extremely beneficial for the client, and of course make it a lot easier for us to add value to the investors who many times don't understand how to structure the right way and being the most beneficial for them. And about 2 years ago, I said I kind of decided to get to the commercial as well, just because I wanted to be a one-stop shop for my clients. So I know how time-consuming and how frustration is to go and knock on many doors just to find the best rate, the best interest, the best leverage. And then I decided 5 years ago, I decided to be a different lender. I said, what if instead of trying to put you in a box of my in-house program here, what if there is another program that benefit the client the most? So I will be doing this service to the client if I only have 1 or 2 or 3 programs and I try to fit you in there, but your needs are totally different. So now I said, what if I have every single box exist today? And that's what I create during the years. So now there are many cases, and I actually have a case study on those, that I was making less, double the money less, half of the money that I was going to make if I offer this program or this program, which is the most beneficial for the client. And I'm going always with whatever is the most beneficial for the client first, not where I'm going to make the most money.
Right.
It's a very unique, but on the other hand, it's a very, very difficult. Just because it's a lot of time consuming, a lot of knowledge behind to know who is doing what and how and why you need to use this and that. And sometimes 2 lenders, it's back to the DSCR, 2 lenders, one lender can be better at 80% and one lender can be better at 75% for the client. If you don't know, as a lender, you just, we use this lender. It's crazy what's going on. Also, back on the DSCR, I forgot to mention that we have as well 85% leverage, which is...
Who's eligible for that?
740 FICO score.
Okay.
And, of course, the DSCR ratio that support the payment.
Interesting.
But we have it. So, in other words, for some duplexes, for some areas where the property value is not that high yet and the rent is pretty good, solid, the Mid-America and some other markets where there is this still balance on that, we can offer up to 85%.
How awesome. That's really, really awesome. So you've gone really, really wide so that you can bring as many different products and even have other lenders. Now, I don't know if it would be called under lenders. They would be called sources, right? Because are you a broker? Or
I'm both.
Okay.
I'm a lender and a broker.
And is that why you can go ahead and work with more than one?
Because I decided to go both because, again, this will be this service if I have only
there's no
couple
doubt.
in-house products.
Totally.
But then your deal is totally different and it's actually benefit of completely different program. So
and
the
investors
beauty of
tend to
both.
try different things after a while, so they may not be doing the same thing. Even if you did have a product that fit for them perfectly, they may try something different, and now they don't fit in that box. So,
Absolutely.
yeah, I understand. One of the good things is that dealing with real estate investors, you have a good opportunity to have repeat customers multiple times, as opposed to, the part of your business that deals with just traditional loans, because usually you're going to buy one house, maybe 2, in your and that's it. Whereas as a real estate investor, you could obviously the goal is to scale and have lots of properties, or to keep continually fixing and flipping, and you're growing and you may change. You might decide to do storage, or you might decide to do commercial or Airbnb. So if you can continue to have that one person's relationship and serve them in many different areas, that's a win-win for both.
So actually, that's a very good comment here, and Actually, my business model is I don't advertise. I don't advertise on Facebook, on Instagram, on any other social media. I work by referral only. So it's extremely important to have a happy clients,
Right.
satisfied customers,
Right.
versus just advertising, getting constantly a new people. So this week we closed 6 loans for one client.
Nice.
Just this week. And this client is a client of ours from a year and a half, and he's constantly doing 3 to 5 loans a month with us every single month.
All right.
So
We want to be doing that at some point.
That was actually something that I wanted to ask next, because we've been talking about hard money lenders and so on, and we're doing private money lending. I just wanted to ask, what is the difference in your opinion? How we can work together with you? How can other private money lenders work with you?
Great question. Actually, this is a very, very popular topic today. The reason is because actually last several months, I was able to do a lot of rescue loans. What I mean? There was many situations where the PMLs, who are specifically those on a second position,
Dreaded second position. Sorry.
they go and lend money to operators who they don't know. They don't know the deal very well. They didn't underwrite the deal very well. They were hoping they will receive on time their money back, plus whatever the interest or the return they negotiate with the borrower. However, many times they don't receive the money on time. Some don't receive money at all. And instead of money, they get keys. The keys coming with some responsibilities. Most of the time, the first lien holder also is already in default and is ready to foreclose. And getting the keys and the deed is very good, but not always. Now, people who lives in, let's say, Virginia and lend to somebody in Houston, Texas, they inheriting the asset, the loan that they need to refinance. Their money are stuck for quite some time, ongoing, and they need to manage. They need to find a manager. They need to manage the asset somehow, some way, and take all responsibilities of ongoing future maintenance and anything that this asset will happen with the asset. So now becoming from a lender, becoming a landlord, right? So I actually start educating PMLs and encourage PMLs to work with me for several reasons. One, they will have another set of very experienced eyes to underwrite the deal. Number two, many times I see many wrong structure deals. So I will optimize the deal, the loan, so that the second position lender coming with the least amount of money needed. So I'll give a cheaper money to the operator,
Okay.
more cheaper money than structuring half and half with a PML, what I see many times, and so very surprised. So I'll give cheaper money to the operator in order the operator to breathe and have intention to finish the project and make some money, of course, to be successful.
Right.
But also, let's say if one deal requires $120,000 just because that's how it was structured, if I can use only $40K for this deal, the PML will have another 2 deals to invest $40K in. So now the risk is spread out within the
Multiple
3.
deals.
So if one goes out, it's not 120,000; it's go 40.
Right.
So in my opinion, that's super beneficial for the PMLs on the second position. and also will create a win-win-win.
So
across the
how
board.
does a private money lender in second position, which we don't do normally, how do they know about you and to come in contact with you, and how do you work with them?
So
What are the mechanics?
So it's fairly easy. What actually we streamline our operation as follows. Many investors are very reluctant to submit documents or give anything before they know, hey, what my rate, what my leverage, is this a beneficial loan for me? So during the years, I, as a actually borrower, but also as a lender, came with this system that the borrower or the PML can have a link from me that they can give to the borrower, to their operator, and the operator will actually answer 7-8 questions. Just that, which is take probably 2 minutes.
Mm-hmm.
And after that, after this 7-8 questions answered, I actually go and produce a term sheet. Exactly
Wow.
how much will be the loan, how much leverage, what will be the interest rate, what will be the term, and send to the operator and to the PML as well. So they can review it, and if they like the term sheet that I present to them, they can either do, hey, looks good, sign, send back, and we are ready to go, or hey, I have a question. Is that the best, or this is this, or is this possible to do something within the term sheet?
Mm-hmm.
And then if they ask and I answer that question, because I have answers for any question, they might say, oh, okay, yeah, looks good. Or, hey, wait, I will send you a new revised term sheet in a couple of minutes with what we discussed right now and what we agree on. They sign, send it back. So we actually have a good support with our CRM, where it's actually once the client sign, and usually is via DocuSign.
Mm-hmm.
They don't need to print anything, don't need to sign anything. When they click and sign, this term sheet coming back to our CRM, and actually our CRM immediately send a link for application and all the necessary docs needed for the loan.
All right, so they're basically you ask a series of about 7-8 questions, and based on that information, you're going to give them a term sheet that is what you're willing to offer if everything goes, if the full application is completed.
Yeah, if
And
nothing wrong on the...
right, like if what they're saying is
Yes.
correct, and if they have questions they're asking, there might be a little bit of back and forth, and then it just
usually
goes
it's
through
very
to,
fast, same day, couple hours.
Wow,
It's pretty fast.
that's
So-
really, really cool.
Also, the other unique thing with us is that we have lenders for every situation. For example, somebody asks, "Can you how fast you can close?" We can close in 48 hours. If you give me more time, you might have a better terms. That's always saying. But can we close if we need to? Yes. The leverage might not be 90, it could be 85. But we can. So in other words, I'm trying to teach investors all the time, any of our clients, hey, we can close this time in 2-3 days, but you might not get the most favorable terms. Please, next time, give me more time so I can give you better terms. So that's how
Easy
we
enough.
operate.
Yeah, yeah. And also, I think that once they have done one with you, and they will know that, and they'll know the kind of timeline you're talking with, and that feels right for both of you, everything works better on the second, third time around. There's no doubt about
Absolutely. Also, very important, we monitor our clients. True example, if somebody has zero experience, like zero, they have good credit, but zero experience. So let's say we do 1 or 2 or 3 loans with them when this immediately will qualify them next time for a different funding source.
Right.
They don't need to remind us, am I eligible to go
I have
to a better?
experience now. Yeah.
No. We automatically go for the next deal and connect with the right source.
That's awesome.
It's
Yeah.
completely spending time knocking on doors on different lenders, and can focus on go and find more deals.
Exactly. Well, I think I'm most impressed by a few things. One being that your length of experience, and that you can offer so many different products so that the person can come directly to you and not have to go to many different doors, and that they can actually, you can progress with them, meaning you're doing repeat business. As you see them going up, you're looking at the most, you're putting them in the loans that are even more attractive because of the experience that they're eligible for.
But not only that, if they use the same entities, we already have their docs.
Oh,
it's
awesome.
a very, very few documents we need. Like, for example, we got a loan 2 days ago for a repeat client of ours, and because we have all his stuff, and we actually closed a loan with the same lender, like literally a couple of weeks ago. We can close his loan DSCR loan in 5 to 7 days. Next 5 to 7 days.
Perfect.
Wow.
Perfect.
What's the standard usually if they're not going through you?
Okay. Standard is really depends on the borrower. We can close loans, DSCR loans, in less than 15 days, like 10 to 15 days. And but sometimes we close loans in 3 months because the borrower not really giving us what we need or procrastinate. So it's really, we can close very fast if the borrower, it's not on us. So
Got it.
Our system is working perfectly. We use very, very fast funding sources. They work with us very, very efficiently because we have in-house processors that are mastering. We actually have processors that master certain lenders, and they work only with certain lenders. That's why it's a mastering. So it's really, really, really streamlined.
Awesome.
Tell us how you like to be, how our viewers can reach out. Like, where can they reach you? How do you like to be contacted?
Okay. Couple of ways. I can definitely give I have a specific line, which is actually a cell phone that they can reach me at.
Okay.
It's a 470 303 6606. They can call and text on this number. Also, they can visit the website dealfunding360.com.
Dealfunding360.com.
And they can go and click on Apply Now, and they can answer the questions based on when they click on Apply Now. The form with the 7-8 questions will populate, and they can go and submit the answers to the 7-8 questions when they have a deal.
Awesome. Okay, so we're gonna drop that in our information below so that you can reach Julian. And I really am just very, very impressed, and I want to say thank you so much.
You're very welcome. Thank you for
being here.
having.
Any last words of, be careful or do this or do that? I don't know. Words of advice? I know I said thank you already.
Yeah, there are so many advices. My main advice is make sure you talk to professionals that understand both sides. Very, very, very rare, very unusual. However, I see a big drama with, especially with investors who has 3 or 4 loans. I got this earlier this week. 4 months, 3 loans, 4 months, no closing on the DSCRs.
Oh.
So I just took it. We'll close in 2 weeks, but it's crazy. It's needed something that I don't know what's happened. So bottom line, talk to people who understand investing side and understand the product and how to deal with
Yeah, yeah, yeah. I think it's extremely valuable that you got in the trenches, that you were doing fix and flips yourself. And are you still doing investing for yourself at this time?
Oh, absolutely. We completed over 250 flips so far in the career, and we did
Nice.
north of 15 new construction projects. We have 5 right now,
Wow.
custom homes built.
Okay.
So we're borrowing money every day and we're lending money every day. So
I love it. I
That's
love
how
it.
it is. So that's actually help us to constantly know
What's-
anything new that
Yeah.
show up, and if sometimes we may miss a funding source and we learn every day, we make sure this funding source is immediately lined up in our library, and also we fire lenders every day. So what that means is,
And why
if
would you fire them?
fire? If somebody stopped performing on our standards, we fire them, and we lined up new.
Nice.
Lined up new every day, fire as fast as we need to, but it's our reputation in the end, and we work by referrals most of the time, word of mouth, so we cannot kind of allow to have a poor service to happen. Unfortunately, sometimes happen. We need to take loan that we submit to a certain lender who performed till yesterday, but stopped performing suddenly. We didn't know. We apologize to the client, but we really take the loan and move very fast to another one that we know will perform.
Wow.
Because sometimes happen that some lenders has slightly better interest rate, and sometimes the client is very picky on that. So we need to go and submit to the lender with a better rate. However, sometimes they stop performing because having a little bit better rate, like we're talking about very small differences, they got extremely busy.
Yeah.
And that's
And they
really
couldn't support the
dragged
capacity. Yeah.
all the pipeline further. So that's why I said, hey, I understand you want this, but you need to be patient because this particular lender who is doing 80% cash out DSCR, which we have,
Yeah.
there are only certain lenders doing it. So be prepared to be patient and take the time to underwrite, because it's only a couple, very handful amount of lenders who are doing it. We know who's doing it. We have access to them. We can submit and close the loan with them. But higher rates, slow turnaround time.
Got it.
Got it.
Got it. Thank you.
Okay. Thank you very much.
Thank you very much.
Dealfunding360.com. We'll put that in the description.
Absolutely.
Make sure you reach out to Julian.
Yes. Thank you very much, and we will see you next time.
Thank
Bye,
you.
guys.
Thank you.